Okay, I'm still in the ABA staff summary of Municipal Advisor Registration Final Rules, and I was in the effective date issues, which is 60 days after the publication in the Federal Register, and then how registration under the temporary system occurs at that time, and then the staggered process for filing under the permanent system begins on July 1st of 2014. What activity triggers the registration requirement? I got a chance to read that too. Thus, if a bank provides advice to a municipal entity or obligated person with respect to an interest rate swap, they will be required to register. Similarly, if a bank provides advice with respect to an investment of proceeds or to a governmental pension plan funded in whole or in part by the process, it will be required to register as a municipal advisor. Definitions: who is a municipal entity or obligated person? Section 975 defines a municipal entity as a state or a political subdivision or instrumentality thereof. 2. Any plan, program, or pool of assets sponsored by or established by such entities. Or 3. Any other issuer of municipal securities. In addition to the state and local government, an instrumentality is commonly thought of as municipal entities under the final rule. Public employee retirement systems and public employee benefit plans or public pension plans, including participant directed plans, 403B and 457 plans, are municipal entities. Local government investment pools, LGIPs, are also included in the definition. Obligated persons, otherwise known as conduit brokers, such as private universities, non-profit hospitals, and private corporations, are included in the third prong of the definition. I excluded from the definition of obligated persons are providers of municipal bond insurance, letters of credit, or other liquidity facilities. What is advice? The final rule does not contain a bright line definition of advice. Rather, whether advice has been provided is an objective determination based on the particular facts and circumstances, likely from the viewpoint of the municipality. However, advice would include a recommendation about municipal financial products or the issuance of municipal securities, and that is particularized to specific needs, objectives, or circumstances of a municipality. Key elements in deciding whether recommendation has occurred include: A. Considering the context and manner of presentation, would the information be viewed as a suggestion to do something or not to do something? Or B. The more individualized the information to a specific municipality or targeted type of municipality, i.e. school districts, the more likely it will be a recommendation. Importantly, whether advice has been provided to a municipality does not turn on whether the provider has received any form of compensation for the advice. Simply providing a particularized recommendation without any remuneration triggers the registration requirement. What is not advice? Advice does not include the provision of general information that does not involve a recommendation. The SEC cites as examples: factual information without subjective assumptions, opinions, or views. B. Information that is not particularized to a specific municipality or type of municipality. C. Information that is widely disseminated for use by the public, clients, or market participants other than municipalities. Or D. General information in the nature of educational materials. More specifically, under the final rule, educational materials constitute general information if the content is limited to instructional or exemplanatory information, such as materials that describe the general nature of financial products or strategies, do not include past or projected performance figures, including annualized rate of return, do not include a recommendation to purchase or sell any product or use any particular strategy, and to the extent additional disclosure is available about a project, such as a prospectus, the materials contain information about how to obtain such additional information. Final rule also exempts advice that is provided as part of a response to a request for proposals or request for clarification. So that's your RFP and your RFQ. I forgot. From a municipal entity or obligated person, so long as no direct or indirect compensation is received. However, Advice provided to a municipal entity or obligated person in connection with preparing the RFP and RFQ may trigger the registration requirement. Investment strategies. The final rule substantially narrows the definition of investment strategies to now apply only to advice with respect to plans or programs for the investment of proceeds of municipal securities or advice and brokerage of municipal escrow investments. Note, however, despite the statutory language of plans or programs for investments, providing advice about a single investment or otherwise subject to an exemption would require registration as a municipal advisor. Importantly, under the final rule, a pooled investment vehicle such as a mutual fund or bank collective investment fund is itself deemed to be an investment strategy. Thus, if even a single municipality invests the proceeds of municipal securities in the pooled investment vehicle, the advisor to the vehicle would have to register as a municipal advisor. This is a significant change from the proposal. The proposal would not have treated pooled investment vehicles as investment strategies due to investments by municipal entities. If a bank provides investment advice to a pooled investment vehicle that includes proceeds, the bank would have to register as a municipal advisor. However, if the advice is provided by the bank's registered investment advisor, RIA, affiliate, registration would not be required. This is because RIAs are generally exempt from the definition of municipal advisor. However, the exemption does not extend to banks providing investment advice because banks are exempted from registration under the Investment Advisors Act. What are proceeds? The scope of the final rule has been dramatically narrowed by limiting the definition of investment strategies to proceeds of the issuance of municipal securities. The final rule defines proceeds as monies derived by a municipal entity from the sale of municipal securities, B, the investment income derived from the investment or reinvestment of such monies, C, any monies held under legal documents that are reasonably expected to be used as security or a source of payment for the payment of debt service on municipal securities, including reserves, sinking funds, and pledge funds created for such purpose, and D, investment income derived from the investment or reinvestment of monies in such funds. When determining whether funds are invested or proceeds, a person may reasonably rely on representations in writing made by a knowledgeable official in the municipal entity or obligated person. The final rule explicitly exempts from the definition the proceeds monies derived from municipal securities issued by a state 529 pension plan, education plan. When do proceeds stop being proceeds? A key question for banks is once proceeds are placed into a deposit account or are otherwise invested, when do they stop being proceeds? According to the final rule, funds stop being proceeds when they are spent to carry out the authorized purposes for which it was issued. In addition, funds lose their character as proceeds at the time that they are commingled within funds with substantial tax or other revenues from government operations and are reasonably expected to be spent for government purposes within 6 months of the date of commingling. Exemptions under or from the definition of municipal advisor. Banks. Banks are exempt from registration as municipal advisors when they provide advice with respect to investments held in a deposit account, savings account, CD, or other deposit instrument issued by the bank. B, any extension of credit by a bank to a municipal entity or obligated person, including the issuance of a letter of credit, making a direct loan, or the purchase of a municipal security for its own account. Then there is C, funds held in the sweep account, or D, investments made by a bank acting in the capacity of indenture trustee or similar capacity. Importantly, the bank exemption does not exempt banks that provide advice with respect to the issuance of municipal securities, municipal derivatives, or advice coupled with brokerage of municipal escrow investments, unless another exemption is available. The final rule treats interest rate swaps as derivatives within the scope of this rule. Thus, while a bank can, without limitation, provide advice concerning loans to municipalities, it cannot provide advice about a related interest rate swap without registration. issues for bank trust departments. Investment advisor activities offered in the bank itself, typically through trust departments, are not exempt under the final rule. Thus, a bank that provides investment advice, for example, to a government, pension plans, or pooled investment vehicles that contain proceeds, would be required to register as a municipal advisor. However, if the advice is provided through a bank's affiliate registered as an investment advisor under the Investment Advisors Act, registration would not be required. This is because there is an exemption for RIAs in both the statute and final rule. Unfortunately, banks are not able to take advantage of this exemption because they are not required to register under the Investment Advisors Act. Areas of particular concern for bank trust departments are: 1. Whether municipal pension plans that they advise have been funded with proceeds. 2. Whether pooled investment vehicles that have municipal investors, including municipal pension plans, have been funded with proceeds. Thus, to determine whether registration is required, trust departments may have to ask the issuer or pension plan whether the funds provided for investment include proceeds. Pension plans may not be funded with tax-exempt bonds. However, taxable pension obligation bonds may be the sources of funds. Although the final rule states that proceeds lose their character as proceeds when they are used for the purposes for which the bonds were issued, the SEC has stated to the ABA that in the case of pension obligation bonds, their purpose is not to fund the pension plan, but rather to pay retirement benefits to employees. The SEC believes that issuers are required to track proceeds, but that is presently unconfirmed. If, in fact, that is the case, trust departments should be able to ask the issuer and proceed based on that answer. Firms are permitted to rely on a written statement from a knowledgeable official of the municipality with respect to proceeds so long as the reliance is reasonable. The pension plan has an independent municipal advisor. The trust department may be able to rely on the independent advisor exemption discussed on page 9. The SEC believes that virtually all pension plans have an independent advisor. Another issue for trust departments arises with respect to ancillary services provided to custodial accounts when held by municipalities. Some of those services include stating how the investments selected by the advisor performed, and also may include recommendations with respect to the advisor. This would seem to be a very gray area that could cross the line from education to advice and thus require registration. The preamble describes educational materials as those that constitute general information in the content, if the content is limited to instructional or explanatory information, such as materials that describe the general nature of financial products or strategies. Do not include past or projected performance figures, including annualized rate of return. Do not include a recommendation to purchase or sell any product or use any particular strategy. It is possible that the language was intended to apply in an underwriting situation as opposed to a simple calculation of how an investment performs, but this is unclear. I have 1 minute to go over page 8, 9, and 10, so I'm going to make part 3.